those of you who are worried about a worldwide economic slowdown, you need some recession-resistant stocks in your portfolio. There's nothing more recession-proof than a pharmaceutical company, which is one reason we're out here in San Francisco for the big J.P. Morgan Healthcare Conference. But you don't just want any big pharma stock. You want one with a catalyst, something that makes the business more appealing than your run-of-the-mill drug maker. Take Bausch Health Companies, BHC, the Canadian drug company formerly known as Valiant. Back in 2016, a scandal-plagued Valiant was circling the drain, and many investors assumed that the company was just a roadkill. Then Joe Papa stepped in as CEO, and ever since, he's been delivering one of the greatest turnaround stories in history. He sold off tons of non-core assets, doubled down on the most promising divisions like Bausch & Lomb Eye Care, hence the name change, and got aggressive about paying down the company's humongo debt pile. So what's next for Bausch Health? Earlier today, we got a chance to check in with Joe Papa, Bausch Health's takeover artist, chairman, and CEO. Take a look at this one. Joe, this presentation, 2019, pivoting to offense, says it all. Tell people what it means.
Well, Jim, we are really excited that in 2019, we are pivoting to offense. Number one, we're building on the momentum we had for 2018. Number two, as we think about where we're going, we think there's some mega trends that are truly going to drive our business, especially in our eye care business, Bausch Health. For all Bausch Health, but specifically in Bausch & Lomb. Number three, it's all about new products. We've been very successful with launching the new products. Now we're really starting to see some of the growth, especially in what I would refer to our significant seven. And the final area, which is new for us this year, is we started to do some, in late 2018, some M&A where we can bolt on products into our existing business. That we think is going to help us in 2019 and beyond.
Some of these analysts are saying, well, listen, that's back to the old Valiant. They're buying something. I see it as the opposite. I think that you've gotten this balance sheet clean enough. You can play offense.
Absolutely correct. We view it as, for example, we put a stalking horse bid in for a company called Synergy that is in the gastroenterology primary care space. It's a perfect add-on to our product Xifaxan, where we're already in gastroenterology primary care, and it just fits so well together. That's what makes us really excited about what we can do for the future.
This guide-up seems uniquely, you said some great things this morning, about organic growth. I mean, this is actual, came from the lab, organic growth. This is not Valiant. This is Bausch.
That's exactly right. And we've increased our R&D investment significantly. I know people first question when I first joined the company, well, you don't have R&D. Well, I said, yes, we do. I'm paying over 1,000 people every day to bring new products to the marketplace, and they're doing a really good job getting our products to the marketplace, and importantly, products that can help make a difference in patients' lives. And that's why we're doing really well and starting to see the organic growth.
Salix is, I think, a unique property, and you've taken it to the next level with some big organic growth.
Yeah, absolutely. It's 16% organic growth. So that's, and mostly behind the strength of a product called Xifaxan, but also another drug, Relistor or Aprizo. Those drugs are helping patients, especially with Xifaxan. It's really making a difference for patients. We found with Xifaxan, for example, that if patients who have hepatic encephalopathy, we can reduce rehospitalization by 50%, and which saves society a lot of money.
Now, one of the things that you've never dodged it, your CFO recently gave a presentation, and he said, we freely admit we are over-levered. When will you not have to say that?
Well, we're working on that, and Paul Herendeen, the CFO, has done a fabulous job of working through the short-term maturities we have and giving us freedom to operate. But our view is that today we're still levered about 7 times, but what we're doing is reinvesting in the business to grow our EBITDA. As we grow EBITDA, obviously that's the best way to get out of this over-leveraged situation. But we think in the near term, as we have a plan, we'll continue to increase EBITDA. As we increase EBITDA, that's the best way to get through this over-leveraged situation.
Others feel that the best way to do it is when the stock spiked to 26, you should have done a big equity offering. I don't think that's your style, right?
We view our company as, we have to always consider that, but we view the best way to do this is grow the EBITDA, grow the revenue, and as we do that, we have a plan to work our way through this. We always have to think about all the alternatives, to be clear, as any good business does, but we think the best way is to grow the company, grow revenue, grow EBITDA.
Joe, a couple nights a week I don't like to sleep. It's just a waste of time. You know what I mean?
Yeah.
Do some work. I got one thing that makes it happen that no one can know why I stayed up all night. It's called Lumify. How big is this one little bottle?
So we launched that product in May. It has done outstanding. From May to now, it's already picked up over 25% market share in the redness reliever category, so that's fabulous. But more importantly, it is the #1 recommended product by physicians for relieving redness of the eye from both the optometrist, the ophthalmologist, because it's a better mechanism of action than a lot of the older products. So it's doing really well. Works within 1 minute, lasts 8 hours.
Doesn't sting.
Doesn't sting.
Okay, so we're getting a spin-off. Novartis spinning off Alcon. I think Alcon's going to be more focused. Something you need to worry about?
Well, I actually think when people look at Alcon, they're going to say, good business, going to probably trade at a very high EBITDA multiple, which I actually think is going to be good for the Bausch stock, because people will reevaluate the sum of the parts of Bausch and Lomb. But importantly, we think we have the most integrated eye care company in the world, even including Alcon, because we have the surgical business, we have the prescription business, we have the over-the-counter consumer business, and clearly have the RX business. And so we've got the most integrated business in the world when it comes to eye care and contact lenses, et cetera. So for that reason, we are very excited about what that means in terms of having an integrated business, because it helps. It has even helped us with the success of Lumify, because we're in talking to all the optometrists, ophthalmologists with the product.
In 1 minute left, there's people like the pipe analysts went from sell to buy. And one of the reasons why, psoriasis, very big product, huge category for you. Let's talk about it.
Yeah, it's unfortunately, it's a very large category. A lot of patients out there with it. What we have found is that by reformulating a product like halobetasol, which we hope Rehali, and then hopefully we'll get Duobri approved in February. We have a PDUFA date in February. We think those two products will help patients with psoriasis by improving their psoriasis, because everybody needs a product like a high-potency corticosteroid that helps their patients, and obviously it will save people money because it's a lot less expensive than some of these injectable biologics. And all the patients that we've talked to, over 85% of the patients use a topical product. We think we got the right product.
Well, you are playing offense, and you're doing it with organic growth, an improved balance sheet, and just a sense of mission, Joe. Like you said, because you got through the litigation, you got through all the bad press, and now you are on top. This stock's a buy. Joe Papa, Chairman, CEO, Bausch Health. What a company, what a transformation. He predicted it on our show. A lot of people didn't believe it. That's right. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.